Welcome to Stock Scope. Today I would like to talk about VBL. You have seen the stock is falling for a while. In just 1 year, it has fallen around 30%. Due to this gradual fall, there's been several questions in the market, such as, is VBL overvalued? Or are promoters reducing their stake quietly? Or is it simply the recent health trends? Though I am very fond of this particular stock, but there's negative sentiment in the market for VBL. So I thought, why not go through it thoroughly? So in this video, we will cover the fundamental analysis, technical analysis, and the recent market news. Okay. Before that, you should know about VBL a little bit. It sells beverage and snacks. Among beverage, there's Pepsi, Mountain Dew, Sting, 7-Up, Mirinda, Tropicana, and for snacks, it sells Kurkure, Lay's, Dorito, Cheetos, these things. Before I go to the fundamental analysis of Varun Beverages Limited, let me tell you a few things. This is still one of the largest PepsiCo franchises globally, and VBL still has exclusive bottling rights for PepsiCo products in India until 2039. We can say that VBL is the market leader in energy drink segment, with Sting especially, which contributed to 15% of the recent revenue. As per news, VBL is pursuing a capacity expansion, product diversification into food and snacking, and international growth in markets like Africa to mitigate seasonality. So like many other experts in the market, I hold a very positive sentiment for VBL and I want to stay invested in it. But this is not any investment advice. I personally like this brand. That's why I'm staying there. And for you to decide, I would like to help you with the fundamental analysis so that you can take your investment decisions wisely. So let's start. So guys, this is screener I'm using for fundamental analysis of Varun Beverages Limited. Here I have already taken some quick ratios, as you can see. Let's check those, okay? So as you can see, here the market cap is quite alright. Stock PE here it shows 54.6. Where is the industry PE? There should be one. Yes, industry PE is 57. So stock PE is fine, okay? 54 is fine. Next comes this ROCE. As long as it's greater than 20% or 15%, it's good enough. ROE is also good. Okay, dividend yield, it's okay, it's fine. Debt to equity is it's less than 1, so it's really good. Profit growth is good. It's more than 10%, more than 20% even, nearly 30%. And PEG is 1.38, means we can buy it right now. Okay, apart from this, here's the sales growth. This is also like 30%. It's really good. But look, compared to like sales growth 3 years, it has decreased a little. Okay, the operating profit margin OPM here it is 23.4, and last year it was 23.2. So yeah, it's fine. We can't complain. Okay, so I think I should go with about and key points of Varun Beverages Limited first. Okay, so let's see. They mainly sell soft drinks, non-carbonated drinks, packaged water, sold under trademarks owned by PepsiCo. It actually sells PepsiCo franchised brands such as Pepsi, Tropicana, Slice, 7-Up, Sting, Kurkure, etc. Along with its own brand. Under its own brand, you can get Creambell, Refresh, Reboost, etc. Okay, VBL's presence as of first quarter of financial year 25, their operations span 10 countries with franchise rights and 4 countries with distribution rights. That's good. Okay, Indian subcontinent, India, Sri Lanka and Nepal has contributed just to the revenues 83%. Okay, that is really good. And there's 3 territories in Africa which contributed to 7% of total revenues. Robust distribution network, sales volume breakup for first quarter of 25, backward integration, PET recycling, strong relations with PepsiCo. Okay, VBL has franchises for various PepsiCo products across 27 states and 7 union territories in India. That's really impressive. Looks like VBL really believes in its products, and that's good. I like this kind of thing in a brand. India is the largest market and contributed 90% of revenues in FY24. Okay, extension of license agreement, expansion. I've already told about these things. Okay, split. Yeah, in 24, the company split the existing equity shares of the company from one equity share having an FV of ₹10 into 2 equity shares. Okay, all right. Yeah, so what I was saying, since July 2024 till September, this part was consolidated. Okay, you can see the same for Nestle stocks also, because Nestle also had a split, and after that it's almost consolidated. Much profit from this stock, and from this bear market when it hit in September 24, it is straight going down. I think like this should be a very crucial point. It should be around like 430 or 420 something. After that, if it goes down, then yeah, it's going to fall. But seeing the fundamental analysis, I can say that it is showing really good profit, really good sales growth and everything. So yeah, it still has hope, because look, after this split it was going this way, right? So it was supposed to go this way only, but it is falling down. So if you're not ready to take that kind of risk with the VBL, I would say either hold it or get out of it. For now, you can invest in some better stock, but yeah, it's your call. I am personally staying in VBL, okay, because this is one of my very favorite. Earlier last time when I had this stock, it gave me really good return. Okay, let's check the quarterly result. Sales, okay, from December, and okay, from December it has gained actually, so that is good. And this was March quarter, so compared to last year March, it has grown. So yeah, from sales it's really good. For expenses, we don't have to actually check this. Let's check the operating profit. Compared to March 2024, it has increased, so that's good. Compared to December, it has increased, so operating profit is also good. OPM, yes, increased. Compared to March, it's at the same, it's fine. Okay, let's see profit before tax, this one. Okay, so in March 24 it was 716, now 978, and in December it was like this. So yeah, it is also going good. The net profit we can check. Okay, this is good, and compared to December it is doing good. Yeah, the quarterly result is really good. It had a really good quarter. All right, now let's check the profit and loss. Sales, okay, let's see in the profit and loss again. From December it has increased, and it has gradually increased. That is really good. Operating profit, once again, it has increased very slightly, but compared to other years it has increased. Yes, it's good. Profit before tax, very slight increase, but yeah, there's this gradual increase, except for this year 2020, but this time we had COVID, so we won't count this for now. I would give it a go. Okay, and profit before tax is good. See the compounded sales growth. Now it's at 29%. If we see 10 years, then 23%, which is really good. For 3 years it shows 31%. That's good. Compounded profit growth, now 29%. 10 years ago it was, for 10 years it's 63%. That's really impressive. Okay, so in just last 1 year it has gone really down, so that's why it is at this 30% almost. CAGR, look, this last 1 year is the problem. That's why we are seeing this kind of profit growth and everything, though you can't believe the profit growth number and the sales number entirely. These numbers are often manipulated. Sometimes, I'm not saying here it is manipulated, but sometimes it gets manipulated. Return on equity, last year 22%, then for 3 years 28%, for 5 years 25%, 23%. All the time it has been more than 20%, and that's really good for ROA. Okay, so yeah, this is a green light from my side for VBL. Next comes this balance sheet. Look, the reserve has increased. Okay, reserves actually gradually increasing since 2020, and even before that also. Fixed asset has increased also. That's really good. Let's see the cash flow. Here the cash flow from operating activity, oh, this has increased. Okay, and net cash flow is in positive. Yeah, see, December 23 its net cash flow was 88, and in December 24 it's at 2024. That is really impressive. Debtor days has increased. That is not good. Let's see the shareholding pattern. Promoters, actually, compared to 24 and December 24, the promoters had increased by 0.03%, but earlier, compared to like September 24, it has decreased. That is not good. But let's see, like, the promoter earlier in June, it was June 22 it was 63, then June 23 63 again. 1%, by 1% it is decreasing every year, and in 24 it has decreased by 2%. Okay, so actually promoters losing their share this way is a matter of concern. Anyway, for FII has decreased, but there's a global sell-off all over the world, so we don't have to worry about this. Yeah, so as it goes, I would like to give it a thumbs up to the Varun Beverage Limited still. Let's do the technical analysis for 1 year graph of Varun Beverage Limited. Alright, so now this is at 450 almost, but it has this support here. This will be this will be around like 440. This will be 435 to 440 actually. So below 440, if it goes down below say like 435, then it's going to fall further, I would say. But yeah, if it takes a breakout from here, then I think it has a really strong support near this line. This will be around like 470 or something. After that it will cross 530 around. See if it goes towards 530 or if it falls below 435. Okay, now let's come to the main part. why Varun Beverage is falling. It's falling for nearly a year now. It's being said that VBL has underperformed its sector by 1.39%. Other than this, there's always that overvaluation concern. There are a few more reasons behind the fall of VBL. The competition is too high in the beverage industry for VBL right now after the launch of Reliance product. Also, we cannot deny that VBL has recently faced some issues in the international market regarding the tax and regulations. There's always some fluctuations in the raw material prices. But I think one of the big concerns for VBL is promoter is decreasing. So I think these are the reasons behind the fall of VBL.